Hey, what's up, fam? You already know what time it is. We're here again, man, to talk about how to strike blood in the water and how to be a shark in the stock market. Hey, if you want to help out the channel in any type of way, man, hey, please feel free to go ahead and get you 2 free stocks with WeBull or get you 1 free stock with RobinHood using my link down below. Hey, also while you're down there, go ahead and make sure you hit that subscribe button and definitely turn on the notification bell so you can be notified every time I drop hot content like this. Hey, in today's market, man, we saw a market that was really down today, and there was blood in the water everywhere. If all my sharks was out there taking advantage of the market and you went shopping, hey, I need you to comment down below and tell me what you picked up on new positions or what added positions you added to your portfolio. Hey, it was a crazy day in the market, and we're gonna talk about what really went down today. I want to take a second to make sure that I'm getting everyone in the right mentality so we can proceed forward and making sure that we're securing the bags and moving ourselves down the line here, man, especially as we're pursuing our 2021 saving challenges and increasing our wealth and building on the hot stocks that we're finding out here in the market and even critical option plays that we're taking. We can't do any of that if we don't have the right mindset. So we definitely got to lock in, and I want to just take a second with you and give you a little game and show you a little hustle so you can understand what's going on out here in this market. But first, let me recap what happened with the market so you can get a better understanding where I'm going to drive this to. Let's look at the market today, man. Look, the NASDAQ was down over 2.5% this week. What today? Not this week. I'm going to get into a little bit here about this week here in a second. But the NASDAQ was down 2.5%. The Dow Jones pretty much down flat all day. And then you seen the S&P 500 finish up down 0.7%. Well, what does that mean? Hey, look, I be tracking certain stocks, man, because I like to make sure I understand what the market is going to do, and I like to see where the market is going to perform. And in our sectors that we deal with and the shark mentality that I have, I got to understand where everybody else is playing checkers while I'm out here playing chess. Hey, so I'm going to show you a few stocks where I want to talk to you about these stocks, man, where you can get a better understanding. And if you don't have these stocks in your portfolio, add them to a watch list. Now, personally, I don't carry every one of these stocks I'm going to talk to you about, but I definitely have one in my portfolio. But I always tracking these stocks because I want to know what's going on, and you should be too. Hey, especially if you're a new investor and you want to make big money, you got to know where the heavyweights are playing at. So let's check it out. Hey, let's talk about Tesla, man. The heavyweight of my portfolio, the #1 position in my portfolio. And look at it, it was down 8% today. I took a beating over to Tesla, but did I sell any? No. Did I buy any on the dip? Not today. I'm planning on it to keep on dipping though. Hey, so with Tesla, it was down almost 12.5% in 1 week, okay? Let's talk about it in a month span. It's been down 15.5%. Another heavyweight that I got 2023 option calls on that's actually down currently today is Apple. Apple was down 3% just on the day alone. And then you see it down over 7% over the last week. And in the last month, a lot of people not talking about it, right? But Apple's down 8% in the last month. And then you're looking at Amazon. It's down 2% today. And then Amazon is down 3% in the last week and over 3.5% in the last month. I think that you're starting to get it. You're starting to see the trend that I'm providing you with, that you're seeing that a lot of these heavyweights are down. But I'm gonna add you one more in there. Stick with me, I'm gonna add you one more. And hey, that's Facebook. Facebook is down 0.5% today, and it's down 3.5% in the last week and 4.5% in the last month. All these are heavyweight stocks, blue chip stocks, and they all involve one thing. They both in the S&P 500, and they both are, all 4 of these are definitely in the NASDAQ as well. So are they in both indexes, and both of them, all 4 of these took dips in the last month, and that tells me that the market is starting to correct itself. Just what we've seen in the market today. You got to understand that the treasury yields are going up and the bonds prices are coming down. Now, the reason why I relate these items to you, these stocks that I gave out to you today, is due to the fact that they've been borrowing money at pretty much pennies on the dollar. And they've been killing it in earnings, and their valuations have ran through the roof because they have not had to pay any taxes or debt back at all. They're pretty much borrowing money for free as they are killing the game in profits. So you have to understand this is where the game is at right now, and the market is starting to understand that they need to reevaluate some of these markets, because if these stocks are going to keep on running, then they need to understand that the yield prices that they're going to start paying is going to be incorporated into their balance sheets. But as long as these bonds stay low and the yields stay low, they're going to keep on running off on a straight beaten path straight to the moon. So this is what you're starting to see. It's the market starting to recirculate, that they understand that the reevaluation needs to come for some of these prices that these stocks are being evaluated at. But here's the thing. There's a secret out there. I'm going to come close. It's a secret out there. Pay attention. It's a secret. Hey, man, look. Some of these plays that you need to be in, that you need to start to have a little diversification in your portfolio, they need to be economic recovery plays. So let me explain. Let's take a look at Disney, for example. Disney currently is up 4.5% today. Well, what you mean they up 4.5% today, Craig? The parks aren't open. They ain't at max capacity. They got most of their parks closed. They definitely ain't got Disneyland open. Well, look at what's going on with Disney Plus. Disney had estimated in 2024 that there would be at 90 million plus subscribers on the Disney Plus network. Well, guess what? In their last earnings report, they announced that they was at 94 million subscribers already to date. And this is in the first year of inception of the Disney Plus, all right? So Disney Plus is carrying the balance sheets for Disney right now, while the cruise lines are tied to the pier, and then you have the parks not operating at full capacity. But that's not the only economic recovery play. Let me show you some more. Look at this watch list that I have of all the airlines right now. You see every single one of the airlines is up today. And then you even take a look at the cruise lines. Don't pay attention to Uber and Lyft, but pay attention to the cruise lines that's in the watch list as well. And they are up all today as well. See, investors are starting to see that the economy is starting to get back on track. We're getting notifications that the pandemic, the virus that we're dealing with, the numbers are starting to go down. And then we're also seeing that the relief checks are coming out again, and we're circulating all this money into the economy. And now we're starting to see that we might even get to herd immunity sometime this year. If all these play a factor, we're going to start to see that all the investors are going to start moving back into the value stocks that they like to play. And some of these economic recovery plays are value situations and value stocks that people wants to be in. So you need to pay attention to that. And I'm just giving you game right now, okay? So let's talk about it a little bit more here. Let's talk about what is going on with the stocks that I talked about earlier, who's all down on the month. They have ran since the pandemic has been announced, and we closed our borders, and look at what they've been doing. They've been on an epic run in the last year pretty much. And they have basically been on a straight beaten path up. If you got in at certain prices, man, you have made a killing on some of these stocks. Some people have become millionaires by just investing in these 4 particular stocks alone. And now what we're seeing is that, like I said before, the valuations have gotten so expensive that it's not a surprise that now they're taking a breather. So this is something that you should understand, that you should not be hitting the sell button. You should understand that it's going to be red days in the market, and you even want to allow yourself to breathe on red days and take advantage of the red day while it's blood in the water if you need to take advantage of it. But as long as you understand the concept of the company that you're in and the business plan and the business model that company has, you should be allowing yourself to buy the dip. You should be buying on red days. You should have that dry powder on the sideline, ready to attack and ready to pounce when the market gives you the opportunity to pounce. So, do I think there's going to be an even bigger market correction out there? Wall Street seems to just suggest that, hey, long as we starting to see that the inflation starts to take up a little bit or uptick a little bit, that we're going to start seeing a lot more stocks having to reevaluate itself. And that's fine. You do want stocks to reevaluate itself at a point in time because you want to give yourself more running room to actually invest in stocks as the valuations come down. So it gives you an opportunity as an investor to take advantage of what the market provides you. So when you can buy stocks at half the cost of what they cost you before, you want to do it. So take advantage of that. So let's talk about commodities. I told you in my video, 5K option plays, that I was going to make an option play on strictly based on commodities when inflation starts to rear its ugly head in the market. And today was one of those days that it raised its ugly head up. And guess what I was invested in one of my option plays? That's a 2-year option play. And that's Heckler Mining, stock symbol HL. It's up on the day due to the fact of what we've seen in the market today. This is a hedge against inflation. And I plan on holding this the full ride all the way out to 2 years just to see how much money that I can pull in. So you got to stay tuned. You need to be paying attention to things like this in the market, and you need to take advantage of that. So check out that video if you want more option plays like that you think that you need to hedge your bets again. So let's talk about, what do sharks do in a time like this? Well, it's blood in the water. And like I already said before, you need to be playing chess, not checkers. You need to have your mind set right that the sell button is broke. This is not financial advice, but if you want to be a shark and you want to make the money that you want to make and you want to set your family up for financial success, you're going to have to think like a shark. And you're going to have to say, you know what? That sell button is broke. I need to be buying. I believe in the company that I invested in, and I need to be buying those dips, and I need to stay ready at all costs, because once you stay ready, you never have to get ready. That's the mantra of a shark, all right? So listen here, man. You need to increase your positions in positions that you have already, that you already know that you have true conviction about and that you believe in. You need to hold steady in the stocks that you have, that you know is going to be banging plays for you if you can hold it out and ride it long term. And then definitely start new positions in stocks that's got your interest, and you know that you need to secure the bag on those stocks as well. Okay, you need to always stay ready. You need to be prepared to pounce at the moment's notice, just like I pounced on Palantir in the option play and adding it to the private portfolio. Look, only companies that you believe in. That's the only thing that I ask that you do, that you make sure that you're notified of and you're thinking about. Hey, and always don't overextend yourself. And if you need to use limit orders, definitely use limit orders to get a price that you want to get in at, and don't overreach. Don't overextend yourself by reaching for a stock because you think you need to buy it at these levels that it's at. You can even probably get a better deal on a stock by setting the limit order and just waiting it out and giving yourself the opportunity to pounce. Hey, I hope I'm providing you with content like that. If you like this type of content, man, definitely hit me with a like, and definitely make sure that you always pick up your 2 free stocks with WeBull if you haven't already, and definitely get your 1 free stock with RobinHood. And you know how I feel about y'all. You know I love y'all. I want y'all to stay safe, and check out the extra one of these videos that I left up here for you, and peace.